What's up, YouTube? It's Jonathan JB. Got a good one for you today. ETFs. You know, ETFs are a great way to make money. I took some notes for you guys. You know, for ETFs, exchange traded funds, they're a great way to they're a safe way to make money. You can put money in. We're going to go over some great tools today and help you figure out a great strategy for yourself. All right, let's dive in. So the top 5 ETFs we have are VOO, VOO, Vanguard VOG, Vanguard VNQ, Vanguard VIOO, and Vanguard Vti. We're going to look at the Vanguard VOO. As we see right here, it's invested in stocks in the S&P 500 index, representing 500 of the largest U.S. companies. Its goal is to closely track the index's return. Now, if we look over here, it offers high potential for investment growth. The expense ratio is 0.03%, so it's not a high expense ratio. The risk is a 4, but once again, you got to go off what is going to affect your needs and where you're at in your life with investments and where you want to be financially. The current price is $331.23. This is a great one. It's covers the S&P 500. It likes to mimic or imitate the S&P 500. You have a lot of the best companies out there. We'll look at the performance of the VOO ETF. Now, if we look at the performance, 10 years. The 10-year ETF average rate of return is 13.9%. That's amazing. So you will get a 13.97% is the average return on your money. So if you had 10K, you would have $1,300 you would make for that year. If you would have had 100K, the average rate of return would have been 13% of every year, which is $13,000. So your money would compound every year. The first year you would have $113,000. The second year you would have earned 13% on top of the money that you put in the interest, and you will go on and build up and so forth and so on. So this is one fun ETF that I recommend you to look at. Another one is the Vanguard VOOG. This one it's a growth index fund. It's comprised of many different stocks, growth stocks with returns. It has a higher expense ratio, as we hear, of 0.10% or 10%. Potential risk is a 4. The current price is $220.57, so it's cheaper than the VOO. All these are recommended. All these are great. The only thing about this one is that, as you've seen, the expense ratio is higher than the VOO. Now, if we look at the rate of return since inception, 2010, 16% since inception. That's been 10 years. For a whole decade, the average rate is 16%. That is amazing. That's great, guys. Anybody can become wealthy. It's just you got to have a strategic plan. You got to be disciplined. You got to be diversified, and you got to be a go-getter. You got to want it, as they say nowadays. Go get the bag. You got to want the financial freedom bag. You got to want the wealth for your family. You got to want the peace of mind, So go get that bag. Let's go. So now if we go to, and this one covers a lot of domestic stocks. It's a large growth stock. Now if we switch over now to the third one, the VNQ, Vanguard Real Estate. Now, we all know how big real estate is. I'm living in a home. You're living in a home. People own homes. People rent homes. People are renting buildings and different things. So at the end of the day, hotels and restaurants. So there's always money being generated from renting, from owning, from real estate. Everybody has to live. And any building that you're living or dwelling in is real estate. Now, the VNQ has a higher expense ratio of 0.12%. So it's 4 times more than the VOO, but it still has great return. See, now, this one covers the real estate 2550 index. Companies that purchase office buildings, hotels, and other real property. Risk, once again, is 4. The market price is $86.40, so it's cheaper than both the VOO and the VOOG. Now, if we look at average annual return. Now, this is more reasonable, guys. Now, for people who could afford this one, over 10 years, well, actually, since inception, which is about 16 years, 7.68%. That's average. That's great. 7% annual return on your money. Compound over years. And as we can see this chart right here, that's if you were to invest $10,000 in 2010, you would have doubled your money. So if we scroll down and see some of the things it covers: hotel and resort REITs, industrial, office, real estate development, real estate operating companies, real estate services. This is a great ETF to invest in. Vanguard Real Estate, American Towers, Crown Castle, Equinix, Digital Realty, Public Storage. See, the thing about ETFs is that it covers a multitude of different stocks instead of you just buying particular stocks. Like, I want to buy real estate stock. I want to buy Main Street. I want to buy Capital. I want to buy Realty Income. You don't have to buy individual stocks with an ETF. It covers and it's comprised of all those. So you can put your money in one avenue and it'll diversify for you. It'll bring back dividends for you and it will grow over time. You will get a compound annual rate of return, which is what we're all looking for. And that's what the goals are, is to make money off of money you invest. It's not about saving money. A lot of people get confused about saving money. Anybody can save money. Okay, let's say you save $100 a paycheck for 26 weeks. You saved at the end of the year $2,600. But how much money did you get interest on that money? $0. So you can save money, but the best strategy is to invest money. We're gonna dig deeper than saving. We're gonna say invest. You invest that $100 per paycheck, or if you have a dual income or more than one income in the house, you can have a double income. You and your wife, you and your significant other, whoever. You guys can do separate ETFs or one together. Your husband and wife, boyfriend or girlfriend, whatever. So the bottom line is you got to start somewhere. ETFs are good. We're going to look at the VIOO next. The VIOO is the Vanguard S&P Small Cap ETF. Now this one has a expense ratio of 0.10%. High risk, guys, but don't forget, high risk equals what? High reward, right? The bigger the risk, the bigger the return, the bigger the bag, the bigger the surprise. Set it and forget it. You put your money in, you keep investing, right? You set it, invest, and forget it. You wait 20 years, 30 years, you go back. Man, what a great return. You can't think of the short term of the 1 to 2, 3 years. No, you got to think of, you want to see the 10-year milestone, the 15, 20, 30-year milestone mark, So now if we look at this one, the current price is $155.74 as of today, November 17th. Now if we go to the average annual returns since inception of 2010, we can see here 11%. So your money on average is growing 11% a year. That's amazing, guys. Where are you going to get that? Anywhere. Are you going to get that in the bank? IRA? Through a bank? Possibly. Are you going to get that through a savings account? No way. Are you going to get that through a money market account? No way. Definitely not how the world is right now with the banking, and due to the COVID-19 and the pandemic or epidemic, it's not happening. You're not going to get that in the CD. So the best smart strategy is to invest in an ETF. You know, I read a couple quotes from a few guys, and one guy said the best way to go is an ETF. That man was Warren Buffett. We all know who he is, billionaire. Another billionaire said a lot of millionaires have been made through the ETF. Jeff Bezos, and another millionaire, as we all know, Bill Gates, Mr. Bill Gates himself. So they all recommend ETFs. They even do ETFs. So if the billionaire club is doing them, the billionaires of the world, us regular people who are striving to do better for our families and friends, do better for our generations and generations to come, do better for our current state. We can do this too, guys. We all can do this. So let's do it. Make moves. You know, put the pen to the paper, right? Put the money to the account, right? Open up a Vanguard account. It's simple. Open up a Vanguard account. You know, you go to Vanguard.com, and it'll have a step-by-step process for you to open the account. Now, the last Vanguard ETF is the Vanguard Vti. Tracks the performance of the CRSP US Total Market Index. This has a mixture of large, mid, and small cap equity diversified across growth and value styles. Now, this is a large bond category and has a low expense ratio right here, 0.03. Now, if we scroll down, the current price is 185.05. You know, risky, but not too risky. Once again, there's so many ETFs, and you got to do what's designed for you. You want to do what's best for you. We're all family. Pick the best decision, family. Now, if we scroll down, their performance pretty well. You know, it's been around about 2 decades. So since inception, 2001, it's currently annual rate of return is 7.6%, which once again is phenomenal. So these are the top 5 ETFs I recommend. I invest in ETFs. Don't forget, guys, the first one is VOO. VOOG, the second. VNQ is the third. That's the real estate one. VIOO. And lastly is VTI. All great ETFs. Now let's do a recap of what we're talking about. ETFs, exchange traded fund or investment fund, has many pros to it. A dividend yield is tax efficient, and we all know we want to maneuver and get our taxes low. I mean, we know who did that the best, Donald Trump. So we know we want to get our taxes just like that, right? Pay low taxes. ETFs also help diversify your portfolio. It helps out. You're making money, and it does it for you instead of picking individual stocks. That's huge, because a lot of times investors don't know how to pick stocks in certain stocks. So the ETF helps you. So it's less work that you have to do. Low expense ratio, which is definitely ideal, you know, saving money. That's the whole point of investing, is to save money. And it's a long-term wealth strategy. Great strategy, long-term. Remember, guys, we're doing this for more than 5, 10, 15, 20. We're going to do it for the 20 years and the 30 years, right? And ETFs create what? Millionaires. If you do the strategy right, you will end up being what? A millionaire. So ETFs are less risky than picking individual stocks. You can buy it on the Vanguard website or different trading platforms. And you know, you got to get to it, guys. I'm posting these videos for you. We're all family. Now I'm going to show you last thing before I conclude with this video for today on a strategy and a projection. Now, if we go to this, right, investment calculator, which by the way I recommend and I love, if we put in a hypothetical, $2,000, if you were to invest in an ETF, $2,000 over the course of 30 years, and we said, right, the average rate of return for ETFs is 12.6%. That's the whole broad, which is high. We'll say 8%. And then I'll show you the 12.6%, what the projectile would be for 30 years. If we do 8% and you invested $100 a month, right? Mind you, when you started out with $2,000, the results would be this. Astounding. Look at this. You would start off at $2,000, and after 30 years, you would end up with $160,000. That'll be your ending balance. And the interest, as you see, accumulates. At year 7, you hit 4 figures. Then you hit 5 figures at year 28. Now, remind you, this is investing $2,000 to start for 30 years at an 8% return rate with a contribution of $100 a month or $1,200 annually. You see this number? You would end up with 6 figures, 161K. You only put in 36K, and you made 123,000 off interest. Guys, you can do this. It's not hard. It's, make sure though you start. That's the key. You have to start. Now let's say if we jump this up to, let's say 12.6%, right? And we maintain doing the 2,000 to start, $100 a month, right? Look at this. Look at the end result, 414,000. You still contributed 36K, and you made a total of interest $376,139.31 over the course of 30 years. You only put in 36,000. Guys, you 10x'd plus your money. You can do it. And a lot of times certain jobs and stuff don't have these different ETFs to invest in, but you can do it on the Vanguard website. You can do it through Webull. You can do it through TD Ameritrade and different platforms. I like TD Ameritrade. Vanguard is great too. So, I recommend any of them, whatever is easiest for you to navigate through and just start the process, guys. So, look at that. Boom. End result. So, I'm going to wrap this up. It's going to conclude, for our video this evening. And, make sure you give me a like, subscribe to the channel, support me, right? And leave me a comment if I'm helping you get to a place you want to be, or if I can help you get to a place you want to be. Those who have my number, give me a call, subscribe, send me a comment, and I'll help you. No paid services. I'll help you guys. We're all family. We're in it together, right? We're all in it to win it. So thank you. Enjoy your evening. And I'll come back with another video tomorrow. I'm out. JB.